It's Monday, the 30th of August 2021. Welcome to Fear and Greed, the business podcast that sets you up for a successful day. I'm Sean Aylmer. The states and federal government agree on a way to reopen economies, but it isn't going to happen anytime soon for Victoria and New South Wales. That's our main story. Also coming up in today's podcast, Apple takes on the Commonwealth Bank over payments. The federal government's popularity tumbles, but the Prime Minister is still the preferred leader. And the steam comes out of the housing market, but there's still plenty of buyers out there. Then stay listening for my chat to Centennial Asset Management's Matthew Kidman about the stocks he likes and the ones he doesn't. First, here's a brief look at markets. Wall Street hit new records over the weekend after Federal Reserve Chair Jerome Powell said the central bank would pull back on monetary stimulus later this year, but only very slowly. He indicated that while there was more inflation in the economy, the sharp pickup recently was transitory, and the employment market in the world's biggest economy was improving. There are still 6 million fewer jobs in the US economy than before the pandemic. The Dow Jones Industrial Average ended up closing up 0.7%. The S&P 500 was almost 1% higher, and the Nasdaq ended the week 1.2% better. European stocks were also higher, with London's FTSE up 0.3% and the Stoxx Europe 600 closing 0.4% higher. The S&P ASX 200 was flat on Friday, finishing at 7,488 points. Over the week, the banks did well, as did the big miners, as iron ore prices rebounded somewhat. But travel stocks were among the best performers for the full week, with Qantas up 21%, Flight Centre 23% higher, and Webjet finishing up 16%. Brent crude jumped more than 2% over the weekend, taking the 7-day rise to more than 11%. Oil prices are now 40% higher than the start of the year. With the Australian dollar weaker, it's currently trading around 73.1 US cents, and oil prices rising, the cost of petrol across the country is pretty high at the moment. And the price of gold was up over the weekend as well. It's trading close to $1,820 US an ounce. The National Cabinet has agreed on vaccination targets to allow lifting of restrictions and lockdowns, ending weeks of debate among states and the federal government about the path out of the COVID crisis. Under the plan, once 70% of people are vaccinated, lockdowns are less likely. At 80%, lockdowns will be targeted and arrival caps will be lifted. The final phase will allow international borders to reopen. Almost 19 million jabs have been administered, and just over 1/3 of all Australians are fully vaccinated, while 57% have had one jab. The numbers in New South Wales, where the virus has hit hardest in recent weeks, are higher, with 36% fully vaccinated and 66% having had one jab. The state reported more than 1,200 cases yesterday, to go with the more than 1,000 on Saturday. Premier Gladys Berejiklian announced 6 deaths yesterday, the highest number since the pandemic began. 89 people have now died in the state during the current outbreak. Ms. Berejiklian said she wouldn't make vaccinations mandatory, but she expects some businesses might. Once a critical level is reached, private businesses won't want unvaccinated people on site, she said. Certainly chief executives led by Wesfarmers boss Rob Scott, Woolworths' Brad Banducci and Qantas's Alan Joyce last week supported the push for vaccinations to aid reopening the economy. Victoria recorded 92 new cases yesterday, the highest of the current outbreak. Its lockdown was due to end this week, but that's not happening. Premier Daniel Andrews said there was still a chance that the state could get back to 0 cases, and he also lashed out at New South Wales for getting extra vaccine doses. The ACT reported 13 cases, and its Chief Minister, Andrew Barr, said the territory was on the path to quashing cases. And in New Zealand, 83 new infections were recorded, the highest number since the current outbreak began. At the moment, every Monday seems like the Monday before. More cases, more argy-bargy over vaccines. At least vax rates are rising quickly. That's the only way out of this crisis. In a moment, the rest of the news you need to know this morning. In overseas news, the United States launched a drone strike to protect the evacuation effort in Kabul overnight, with the US military saying it carried out a self-defense airstrike on a vehicle which posed an imminent ISIS-K threat to the international airport. ISIS-K is the group that claimed responsibility for a suicide bombing late last week that killed 100 Afghans and 13 US troops. Ahead of the attacks, Americans in Kabul were told to leave the vicinity of the airport. President Joe Biden said the US military would be able to protect Americans in these final days of evacuations. More than 80% of Singaporeans have now been fully vaccinated, and the city-state is opening up economic and social activities and allowing some quarantine-free travel. Malls and cinemas are reopening, workplaces can have up to 50% of employees, and dining in restaurants is allowed. For many Australians, that does seem a long way away, but it's the benefit of getting vaccinated. Meanwhile, the cause of the virus continues to garner attention in the US. 3 months ago, President Biden asked his spy chiefs to find out how coronavirus started. They've reported and said they couldn't reach a conclusion whether COVID first spread to humans via animals or because of an accident at China's Wuhan Institute of Virology, as has long been speculated. And Beijing has set its sights on the Chinese entertainment sector. Following recent crackdowns on technology companies and education providers, the country's anti-corruption watchdog has hit out at celebrity culture. The Central Commission for Discipline Inspection singled several celebrities and cited a wave of negative news. On Friday, China's internet regulator, which in itself is an interesting concept, set up 10 measures to solve the problem of chaos in online fan culture. Good luck. Locally, Apple has accused Commonwealth Bank boss Matt Comyn of making misleading and false statements about Apple Pay and the technology giant's business in Australia. It follows Mr. Comyn last month telling a parliamentary hearing that the bank should get access to the iPhone chip that allows payments, adding that the tech giant should be regulated because it was operating as a payment system. Apple said other providers could access the chip, and that does include Commonwealth Bank, if they paid a fee. The tech company said it was evident from comments during the inquiry that Apple's focus on what's best for customers wasn't shared by others. Meanwhile, the Financial Review is reporting this morning that Treasurer Josh Frydenberg would be given new powers over the payment system, including the ability to direct Apple and Google under new proposals. It means Mr. Frydenberg would have the power to force Apple and others to open up their digital wallets. The Treasurer is quoted as saying, if nothing is done, Silicon Valley could determine the future of Australia's payments system. More than $13 billion in payments from JobKeeper went to businesses last year that recorded increases in revenue during the first 6 months of the program, according to the Parliamentary Budget Office, triggering claims of waste by the federal opposition. Almost 196,000 companies that received payments posted a rise in revenue. The scheme was designed in a rush and aimed to get money out the door quickly to help businesses. It did the job, but it was very expensive. Popular support for the federal coalition has fallen to its lowest level since the last election, with smaller parties benefiting, according to the latest news poll in the Australian newspaper. But personal support for the Prime Minister Scott Morrison has lifted. The coalition's primary vote has fallen to 36% and Labor is at 40%. On a two-party preferred basis, Labor leads 54 to 46%, the largest lead since the May 2019 election. Mr. Morrison leads opposition leader Anthony Albanese 50 to 34% in terms of preferred Prime Minister. Wesfarmers turned out a strong profit on Friday, with net earnings rising 16% last financial year to $2.4 billion. The group has no debt and announced a special dividend for shareholders on top of its final dividend. Officeworks, Bunnings and Kmart all performed strongly, and the turnaround of Target stores continues. Online sales have been particularly strong. There was a small drop in the group's energy, fertilisers and chemicals business. Chief Executive Rob Scott was wary about earnings this half, though, on the back of ongoing lockdowns. He said all permanent and many casual staff would continue to be paid until at least the end of December. The group's share price fell nearly 3% on Friday. One of Afterpay's biggest global competitors, Affirm, has struck a deal with Amazon, allowing customers to pay for their purchases in instalments. Anything over $50, which is about 68 Australian dollars, can be bought via instalments. Affirm is a major player in the US, along with QuadPay, which is owned by Zipco. Other big players in the US include Afterpay and Swiss-owned Klarna. The housing market is chugging along, shall we say. Not quite like what it was, but there's still plenty of buyers. Over the weekend, nearly 2/3 of scheduled Melbourne auctions were pulled, according to the Financial Review, and more than half of Sydney homes sold ahead of time. The weighted average clearance rate of auctions was 55%, the lowest since April last year, at the height of the pandemic. And retail sales fell 2.7% last month as lockdown started to hit spending. It was the largest monthly fall this year and follows a 1.8% drop in June. New South Wales was particularly hard hit, with the lockdown triggering a massive 9% drop in turnover. Victoria was the best performing state as restrictions eased, and that was ahead of the most recent lockdown. The biggest drops came in clothing and footwear and cafes, restaurants and takeaway food services. It's a big week for the economy, with June quarter economic growth figures out on Wednesday. If the figures show that the economy went backwards during the quarter, which is possible, though a less than 50% chance, then the economy will officially be back in recession. That's because this quarter, it's definitely going backwards. A couple of recent IPOs also reported late last week. Peter Warren Automotive posted a strong net profit well above its prospectus forecast, though warned that lockdowns were creating uncertainty around the current half. Its share price tumbled nearly 6% on Friday and is slightly down on its listing price back in April. But candle retailer Dusk Group said its net profit more than doubled on a big jump in sales. Its share price is up almost 2/3 from its listing price in September last year. And finally, guess which capital city has the oldest population and which has the youngest? According to the Bureau of Statistics, Darwin is the youngest capital with a median age of 34.7 years, compared to 36.5 for all capitals. The oldies live in Hobart with a median age of almost 40 years. Imagine being 40 and considered old. Anyway, Darwin also stands out for another reason. It's the only capital city with more males than females. Adelaide holds the mantle as having most females per 100 males. Don't go anywhere, because up next is our daily interview, and today's all about picking stocks. I'm joined again by Matthew Kidman, Principal of Centennial Asset Management. We talk about the just completed earnings season, what was good, what was bad, and the stocks that Matthew prefers at the moment. Whether you're an experienced investor or just getting started, don't miss the interview. Up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au. After that, I'm joined by our resident economist Stephen Koukoulas for a look at the week in economics. Of course, there's plenty to discuss from last week too, and what it all means for the coming months. That's Fear and Greed, the week ahead, out every Monday. And if you're looking after something a little more relaxed, why not check out yesterday's Sunday edition, where the Fear and Greed team had a chat about the big stories of the week. It's Monday, the 30th of August, 2021. I'm Sean Aylmer, and that was Fear and Greed. Enjoy your day.